Good morning, traders. It's 8 a.m. Chicago time on the 29th of September, 2015. It's a Tuesday. Just a quick note. I just noticed that I mislabeled this YouTube broadcast to 0928. I don't want to throw you off for the rest of your day and make you think that somehow um, your date is off. It is the 29th. Again, Tuesday. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Not much to report on the overnight news. I do my best to spend as little time on it as possible. One of the key elements here that came through is India's central bank cuts repurchase rate by 50 basis points to 6.75% from 7.25%. That sent commodities prices, commodities issues dropping on the overnight session. That news came out at half past midnight Central Time. After that, the European markets reported Germany import prices in line, CPI is in line, and then mortgage approvals in the UK better. Consumer credit is slightly lower, and in the European September Business Climate Indicator came in at 0.34 versus 0.2, very strong, and that's where we'll see, and I'll show you in the overnight session, that's where we see the push up. German September preliminary CPI comes in at negative 0.2 versus negative 0.1, slightly worse. And then overall, the Euro stocks, the S&P futures are higher, the Euro stocks are lower. Crude oil by a lot, 1.61%. U.S. 10-year yield is about flat. The Euro is down just slightly. The DAX is up just slightly. The FTSE's up just slightly. The Hang Seng down 3%. And the CAC 40, the French index, is up just slightly. Case-Shiller just came out a few minutes ago. Negative 0.2 versus plus 0.1. There appears to be an issue with dropped frames in the broadcast here. Things are not 100%. For some reason, something's going on with my broadband connection here at home. Let's cut immediately to the charts and look at what we've done. Keep this broadcast short. Overall, yesterday's move was unexpected. Hypo 2 was what played out. Hypo 2 expected a choppy open and a drop. Overall, here's what we got. We opened just out of range. Oh, 1 second. Man, all kinds of technical issues here. Sorry about this. Not sure what's going on here. All right. Opened just outside of Friday's range. The expectation was for it to chop around the 1907. The primary expectation is then eventually to find responsive buying back up. It did not. It tested the range right away in this bar, and then it could not go back, and it's been a seller. It tested below the prior day's low, or the 2 days ago's low, which is the balance low, the 2-day balance low, easier seen on the 15-minute right here. And then it was just all selling from there. Man, I'm getting a lot of dropped frames here. My broadband connection is not keeping up, even though it's 100 megs. In any case, the way we ended up yesterday, we ended up with a profile that showed that there's absolutely no consensus on price. The market was seeking buyers and couldn't find some. The main target below was 1884.75 right here, this point of control, and it took it out, and it just kept going and going and going, with the next key level being at 77.75, 67 and a quarter, and then the next one down is 50 at this point. So if the market continues lower, this is where we're looking to go, 56.50. Overall, the market has been selling quite a bit, and it did continue with its point of control down at the low side of the range. You can see here there's a poor low here. A discussion in the chat room yesterday was that we're likely to see a lower low overnight, which we got into 63.50 and a push to 61. And then it rallied on the news overnight from Europe. So here's the push up overnight. We have a weak high. We have a point of control that's against the high, so the expectation is for this to continue higher on the open. So overall, the overnight inventory is, so we're likely to see a pullback on the, looking for it to push to 92.75, which is the key LVN and the IB low right here. That's very, very close. It's pushed higher than expected. It's pushed higher than expected. But overall, the market's probably going to be stuck in yesterday's range today. Yesterday's range was very wide by historical standards. It came in at 43 points right here, 43 points. So again, the primary hypothesis is to open in range in value, test lower, but I'm expecting it to push higher into the 92.75 and be stuck within the prior day's range. I expect the overnight high to be taken, not the overnight low. Let's take a quick look at the SPX. The SPX chart here for a minute. The SPX chart shows that we're breaking that trend line, the downtrend line, and we broke it a little bit in August, but we're breaking it here again. You can see in August we broke it, and we pushed up, and we formed this ascending triangle. And we've broken below that, and we've broken through the trend line. Now on the SPX, between the low that was put in yesterday and the low that was put in August, there's only about 20 points difference. The low we put in August is around 60, 67. The low we put in yesterday is right here at 79. So it's about 12 points. Whereas in the futures, it shows a big difference, probably another 20 points, I think. But overall, the 52-week lows in red are getting stronger as the market was selling off yesterday. I expect it to rest today. I expect this to turn down a little bit and for this to stay steady, but it's just a pause. I expect another leg down. So I'm looking for another leg down, and just like I talked about at the beginning of September when I first came back from my vacation, I expect that 1821 in the ES to be taken out at some point to complete the impulsive move down. Now, I understand that the broadcast has been choppy. I can't control that. It's there's something going on with the broadband connection. I'm starting from home today instead of the office. Unfortunately, the cable company cannot provide what it promised. But in any case, so for today, looking for a move down, chop, 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 looking for the IB of the overnight high to be taken, looking for 92.75, but overall expecting it to be stuck in this range. Now, if that does not happen, and I really need you to pay attention to this, if it moves up initially, takes out the overnight high or nearby, and it starts to move lower and starts to make lows, then I'm looking for an aggressive short into 56.50 and a few other areas below. 56.50 is important. Let's look at the big picture. If I pull back and look at the composite of that low that was put in back in August, you can see that there's a cutoff here in the 52 area. If the if the market drops to 56.50 and starts tackling 52, this could be a very fast drop down. So pay attention here. The better opportunity for day trading is the low side, for it to just drop off the face of the planet here. But the overall consensus, given yesterday's range, given where we're opening, given the overnight, is it's likely to stay in range today. But overall, this market is ready to blow through, and below 52, I would be cautious as a buyer on a day trade, as there's not much to support this thing underneath. So if we look at the intraday profiles, you can see there's no volume really below 67. And on this day, there's very little volume below 62, with 56 or 52 being the cutoff point on the composite, and not much there to hold this together. So once it gets through 56.50 and starts moving down there, I suggest that you stay away from getting long for a position. Maybe for a scalp, sure, but for a position, probably not. Anyway, with the broadcast being cut off like it is and stuff, I'm gonna hop off here. I don't want to make it as painful, more painful than it has to be. Um, One last quick thing here. We left quite a few singles yesterday on the market profile. There's one there at 92.50. There's another one at 86 even. Again, 92.50, 92.75 is the key area we're likely to test above. You'll want to keep an eye on those levels. But overall, we've broken out of the multi-day balance we've had for last week, and we are lower, and we are testing the levels we had back from the day of the drop off. So we've taken out a lot of territory here that the buyers have fought hard to take back, and it looks like the market is likely to head down to 1821 soon. One more thing. If you're looking at this through the Stage 5 website, I put a link in for the public AAQ this Thursday. I'll post it on Twitter today. If you want to sign up for that, please do so from that link. If you're on the if you're on the list for my website, you will get an invitation as well. I'll shoot you an invitation, and just give you a chance to ask your question before the AAQ starts, so I can get to as many questions as possible. Sorry about all these issues today. Good luck to you, and I'll catch you tomorrow. Take care.